Hello and welcome to the look ahead for Tuesday, the 16th of September with me, Fiona Sincotta, Senior Market Analyst at City Index. So tomorrow, bit of a full day. We've got UK unemployment data kicking off in the European session. We also have ZEW economic sentiment for the Eurozone and Germany. In the US session, we have Canadian inflation and also US retail sales. So just kicking off first with UK unemployment. UK unemployment is expected to remain at 4.7%. Average earnings are expected to come down very slightly to 4.8%, down from 5%. And the claimant count is expected to increase by 20.3,000. So as far as the jobs market is concerned, what we're going to be watching closely here is obviously that we're not seeing a further deterioration. So we're not seeing unemployment tick higher, but we're still watching that wage growth area because inflation in the UK continues to remain sticky. And now we do also have inflation data this week, which is expected to tick higher again to 3.9%. We've also got the Bank of England interest rate decision where the on Thursday, where the central bank is expected to leave interest rates unchanged, but policymakers will continue to watch service sector inflation, which is intrinsically tied to wage growth. So that sticky wage growth does remain important as far as the ability for the Bank of England to be able to cut interest rates. Now, whilst we're seeing the UK jobs situation hold up, we are also seeing that there is some weakness coming in, just slowly, very much on industry data. We've seen sort of the sense that firms are cautious with regards to hiring, particularly ahead of the Chancellor's budget in November. Now, in April, let's not forget that we saw those measures come in by the Chancellor's previous budget, which saw the unemployment burden, the national insurance burden on employers increase at the same time that the minimum wage increase as well. So that's one of those things, one of those decisions that's been feeding through to slight weakness in the labour market, as well as that stickier inflation. Now, this is the pound US dollar chart that we're looking at here. Just worth mentioning, as I said, that we do also have US retail sales data out tomorrow, which is expected to show sales increasing 0.3% month on month, down from 0.5% previously. Now, the US dollar does remain under pressure, fell across last week, it's a bit weaker this week as well at the start of the week. And that is because of expectations that the Federal Reserve will be cutting interest rates at the meeting this week. So because of that, we have seen this weakening in the dollar, which has helped the pound push up here. We did briefly rise to 136.20 at the highest level that we've seen since early July. Back below that 136 level as we speak, but we're just trying to break above that falling trend line that dates back to the 2025 high of just below 138. So if we do see that sort of sense of sticky inflation, wage growth in the UK, then that might be enough to get that price level to settle above the 136 level, because that's going to be key in order to bring the 137 level into focus ahead of 138. As far as support is concerned, if we do see, for example, an increase in the unemployment rate or a larger than expected drop in the wage growth, then we could see the price come down to test this level around here, which is the 135 level. That's the 20 SMA. It's also the falling trend line support that we've been talking about, but really it would take a fall below the 133.60. That was the low that we saw in September to create a lower low. So just talking next about the euro US dollar. We have, as I mentioned, German ZEW economic sentiment, which is expected to ease down to 27.3, down from 34.7, amid some signs of, this is in Germany, amid sort of signs of concerns over the political situation. We've obviously got the trade agreement with the US now in place, but what that actually means. Just some general sort of sentiment fooling in or deteriorating in the Eurozone's largest economy. Now, this is the euro that we're looking at here, euro US dollar. We've obviously got that, you had that news as well today that the Fitch rating agency downwardly revised France's credit rating to A+, down from AA-. Now that's also just weighed a little bit on the euro, not so much against the US dollar, but yes, against the pound. But that could just limit some upside. It does sort of raise some concerns because of the political instability, the difficulty that the new French Prime Minister could have in pushing through the budget. Now, that's obviously been playing out much more in the French yield, bond yield, than it is in the euro, but it could just be limiting some upside there. But as I said, tomorrow, attention on the ZEW economic sentiment. If we do get a stronger than expected reading, then we could find that that does help the euro push towards that 118.30 level. Now, I think the big play here, obviously, this week is going to be the Federal Reserve rate decision. We had the ECB rate decision last week where the ECB left rates on hold. If the Fed moves to cut rates, which is what's fully priced in, and potentially indicates further cuts across the year, then we could actually find that that pressurizes the US dollar further, highlighting the divergence between the ECB, which may not cut interest rates again, and with the Federal Reserve, who could potentially be cutting interest rates at every meeting across the rest of this year. So, as I said, levels to be watching out for on the upside, 118.30. On the downside, you've got this sort of level here around the 116.75. That's the 50 SMA. But again, it would take a break below the around the 116 level, which was the low that we saw in late August, in order to create a lower low and open the door to around that 114 level. Just also going to take a quick look at the DAX whilst we're here. Not really doing too much, but finding that it is rather range bound. Obviously, we were range bound for quite some time, just below record highs, fallen down, broke out of that range. We're now trading below that rising trend line, but once again, very much in a consolidation pattern. On the upside, you would need a rise above that sort of around 23,900, 24,000 in order to get back up towards bringing the 24,600 into focus. On the downside, looking for a move below 23,500 to break lower towards the 23,000. And then just finally, as I said, we've also got US retail sales. Now, I think these are going to be quite closely watched just because we are seeing this deterioration in the jobs market, which does really can then fall into deteriorating consumer confidence, which means that we can see then retail sales slowing. Now, we haven't seen any of that really happening so far. That's what's going to be the market's going to be watching out for. So just a slight slowdown to 0.3% as expected, down from that 0.5%. At the moment, we've got the S&P and NASDAQ trading at record highs on those expectations of Fed rate cuts, on expectations of potentially one rate cut per meeting towards now and the end of the year. And, you know, the data, as I said, it seems to be, we've seen that weakness in the jobs data. We've seen inflation tick higher. Data is not weak enough to create recessionary fears, but it's just weak enough in order for the market to be pricing in those Fed rate cuts. If we see a deterioration in the data coming through, for example, a big drop in retail sales, or you know, a serious decline in consumer confidence and personal spending, those sort of data points could then unnerve the market about the economic outlook for the US. But as I said, for now, we're not there. Just watch. This is tipping into overbought territory, so buyers should be cautious. As far as levels to be watching, 6,700 is the next logical level. We're sort of rising up, following up this rising trend line, trading up above the 20 SMA. As far as support levels concerned, you've got the 20 SMA there at 64.85. That's also the rising trend line. You know, down there we've got 6,300. But, you know, this is a fairly established uptrend that we have in focus. So thank you very much for watching. I hope that you've enjoyed what you've seen. And for more videos like this, please do subscribe.